Right, let's now continue with our accounting revision. So before the ad break, we calculated cash generated from operations. I'm now moving on to interest paid, which fortunately doesn't need to be calculated. It is given to me. So if I go back to my information, interest expense, 25,000. So interest expense and amount, right, of 25,000 appears in the income statement. And remember, looking at my interest expense, there is no accrued expense for my interest expense, which means that the interest expense is equal to interest paid. So interest paid an amount of 25,000 will now be subtracted from the actual cash flow statement itself, or on the cash flow statement. Right, let's now move on to dividends paid. So for dividends paid, I obviously need my dividends for the year. So dividends paid and declared, please remember guys, they are giving me interim and they are giving me the final dividend. So that amount of 20,000 represents the total dividends for the year. So I obviously need total dividends for the year. Then for this calculation, I will need shareholders for dividends, amount owing my shareholders at the beginning of the year, as well as at the end of the financial year. Okay, so my calculation will begin with shareholders for dividends at the beginning of the year is sitting at 25,000. So remember that 25,000 is obviously an outflow of cash, because whatever I'm owing at the beginning of the year as a company, we end up paying this to our shareholders. We're not going to make them wait for the entire year. We're going to obviously pay them whatever was owed at the beginning of the year. So remember, that is an outflow of cash. Okay, it's an outflow. Then my total dividends for the year was an amount of 20,000. Okay, and that 20,000, that expense is also assumed to be an outflow of cash. So it will be in brackets. It's a negative value. Then I've got shareholders for dividend at the end of the financial year. And this amount represents what I'm still owing my shareholders at the end of the year. Now remember, still owing means this money did not leave your bank account. So that 14,000 is still in our bank account. It is an inflow of cash. So hence, it's not in brackets. Right, so my total dividends that was paid for the year, I'm taking opening balance, I'm then adding my dividends for the year, and I'm obviously minusing the 14,000, okay? Or you can obviously start with a negative 25,000, negative 20,000, and plus 14,000. You should get the same answer. Okay, so let's do our calculation. So I've got 25,000, I'm going to keep it as positive, plus 20,000, okay, minus the 14,000, and the dividends that we ended up paying an amount of 31,000, right? Or you could obviously begin with the negative. Let me just write it down. I don't need to do it on the calculator. So you can begin with negative 25,000. Then you've got negative 20,000. And obviously you've got a positive 14,000. So your dividends paid is 31,000. You're still going to get the 31,000, guys. And remember, that is obviously negative, okay, because that money left your bank account. Right, so let's enter the 31,000, and remember, it needs to be in brackets. Show your calculations in brackets, or tell the examiner where you've got your calculation, preferably on the actual page itself. Okay, right, let's now move on to income tax paid. And once again, income tax paid, I'm going to need the following. So income tax for the year, 75,000. Then if I look at my notes, 2017, Okay, income tax was nil, but 2016 SARS owed the business 6,250, so clearly that was a debit balance, or we can refer to it as an asset. And in 2017, SARS income tax is trade and other payables, in other words, a credit balance, a liability, 16,250. Right, so what are we going to do with this calculation? So once again, we're going to begin with our opening balance, just as we did for dividends. So my opening balance at the beginning of the year, an amount of 6,250. Now guys, if you look at this opening balance, 6,250, SARS owes the business 6,250. So this money is going to be deposited into the business's bank account. We are not going to pay this money. We are going to receive this money from SARS. Hence, it is an inflow of cash. Okay, money is going to go into our bank account, or the business is going to benefit from this debit balance. Right, then my income tax for the year was 75,000. And remember, your tax expense, 75,000, is obviously an outflow of cash. You are expected to pay the receiver the 75,000, your tax expense. Hence, it's negative. We're going to put that in brackets. So this is an outflow of cash. It must be in brackets. Right, then at the end of the financial year, SARS falls under trade and other payables, and obviously it's a credit balance, it is a liability, so we are owing the receiver an amount of 16,250. So this is obviously our closing balance. We have not paid this money to SARS. This is how much we are owing SARS, and because the money hasn't been paid as yet, that money is staying in our bank account. So that amount of 16,250 is also an inflow of cash. Okay, right, so remember, we are trying to establish in total how much did we end up paying the receiver of revenue. What was the total outflow of cash? So as you can see, you've got a negative value and then you've got two positive values. Okay, so on my calculator, I'm going to just swap them around, so I don't have to put negative signs, but you know what, you can do that, it doesn't really matter. So I'm starting off with a negative 75,000, okay, then I've got a positive 6,250, and I've got a positive 16,250, and that gives me a negative, the amount that I've paid, 52,500. So 52,500. Okay, right, so that's how much of income tax we ended up paying the receiver of revenue, an amount of 52,500. Okay, right, and remember, it's got to be in brackets because that money would have left our bank account. Okay, I know you guys know this, but I'm just really going slow with the calculations because remember guys, each of the calculations that I just completed in your exam is worth at least 4 marks, and you want to get 4 out of 4 for this particular calculation. Please just remember, if you are showing your values as a negative value, just make sure that your signs, positive, negative, is consistent. Okay, so please guys, just remember that. Right, this is obviously going to go into our table, right? So we've got that table drawn up already, or a block, not a table. Okay, so my cash generated or cash flow from operations, let's just clear the calculator. So we're starting off with 124,250. Then we are subtracting 25,000. We're also subtracting 31,000, and then finally minus 52,500, and the cash flow from, oh, did I make a mistake? I probably did. What did I do wrong? Let's just quickly clear this and try it one more time. So I'm starting off with 124,250. 250. Okay, let's just do that one more time. And then minus 25,000. Okay, minus an amount of 31,000. Okay, and then finally minus 52,500, and we should end up with an amount of 15,750. That's correct. So 15,750. So we're now moving on to cash flow from investing activities. So remember, guys, the word investing activities refers to the buying and selling of fixed assets as well as other investments such as a fixed deposit. How has this changed from one year to the other? So we're going to begin with purchase of fixed assets, and for that, let's go back to our information. So looking at the information given to us, we are now focusing on note number 1, or additional information 1. Let me just quickly clear this a bit because I want you guys now to focus, right? Okay, there we go. That should give me a bit of space to write, and obviously much clearer while I'm reading. Okay, so we're looking at information 1. Tangible assets comprise of land and buildings and equipment. Additional property costing 93,750 Rand was purchased during the 2017 financial year. So immediately, great. I've got the cost of the additional land and buildings purchased. I don't have to calculate this amount. It's given to me. So I'm going to go straight to my answer sheet, and I'm now going to record in brackets the land and buildings purchased, an amount of 93,750, and I've got 1 mark for filling that in. Let's read on. Did we buy any equipment? Right, so equipment costing 10,700 Rand was sold at carrying value. The accumulated depreciation on equipment sold at the date of sale was 7,000. New equipment was also purchased during the year. Okay, so immediately we did buy new equipment. New equipment is obviously fixed assets purchased, so I need to now calculate the new equipment purchased. Now remember, guys, there's various ways in which you can do the calculation. You can draw up the tangible asset note, which most students do, or you can rely on your ledger accounts. You decide. Right, now I prefer the ledger account, and in this particular case, I'm drawing up the ledger account for equipment. So obviously equipment is an asset, okay, increases on the debit side, decreases on the credit side. We all know that. Right, at the beginning of the year, now if I look at my equipment, okay, as you can see in the balance sheet, I am given tangible assets, but I'm given tangible assets at book value, and they're not breaking this down for me. So clearly, this T account is not going to work. So as I said earlier on, you can either draw up the note tangible assets, or you can draw up the tangible asset note in a T account format. So that's exactly what I'm doing, right? So tangible asset, carrying value in a ledger account format. Right, if this is confusing, I will do the tangible asset note once I've explained this, but I often find students really prefer this ledger account. So tangible asset at the beginning of the year, my tangible asset has a carrying value of 275,000. And remember, this is all my fixed assets, land and buildings and equipment. Then at the end of the year, right, my tangible assets has a value of 352,500. So 352,500. Okay, hopefully you guys can see that. 352,500. Now what I'm going to do on this side of the screen, let me just quickly draw up the note for tangible asset, and you guys decide which you prefer. So at the beginning of the year, carrying value at the beginning of the year is sitting at 275,000, and at the end of the year, my carrying value at the end of the year is sitting at 352,500. Okay, so you're going to see in essence, we're going to do the same calculation, but obviously slightly differently. Right, tangible asset increases when there is a purchase. So obviously we record additions at cost. So if we look at our additions, we did buy additional land and buildings for an amount of 93,750. So that was our land and buildings. But as far as equipment is concerned, we don't know what the value is. So obviously that is an unknown figure. We don't know how much of new equipment we purchased. So remember, here under additions, you would obviously have your land and buildings, 93,750. Equipment, I'm just going to put that question mark because that's what we're trying to calculate. Right, tangible assets decreases when there is a disposal, and remember disposals are recorded at carrying value, as well as when we write off depreciation. So as you can see, it's the note, right? So obviously we've got disposals at carrying value, and we've got depreciation. Okay, so we've got depreciation and we've got disposals. I know you guys can't see that clearly, but guys, this here I'm referring to as disposals. Okay, right, you can't see the left-hand side of the screen. Sorry, guys. Right, so disposal at carrying value. Now, if we look at our information one more time, equipment costing 10,700 Rand was sold at carrying value. The accumulated depreciation at the date of sale was 7,000. So remember, carrying value for disposal is my cost, 10,700, okay, less accumulated depreciation of 7,000. And that gives me a carrying value of, it should be 3,700. So 10,700 minus 7,000, 3,700. So at disposal, right, the carrying value 3,700. Okay, so let me just fill that in brackets 3,700 if I were doing the note. So remember guys, I'm doing the same calculation, but obviously, or I'm calculating the same amount rather, but I'm showing it in two different calculations, and you decide which one you prefer. Okay. Right, and then finally, depreciation also decreases my tangible asset, the carrying value. So depreciation for the year on equipment, because land and buildings doesn't have depreciation, an amount of 31,250. So depreciation decreases carrying value, 31,250. Okay. Right, now in order for me to calculate the new equipment purchased, if I'm drawing up the note, please remember you are working from the bottom and making your way to the top, and you are working backwards. So in other words, exactly what we did earlier on. So where you subtracted, you are adding. Where you added, you are subtracting. You are working backwards. And that is why I prefer the T account, because then students don't really get confused. So all they're doing now is solving for the unknown value, the value of equipment that was purchased, and it's straightforward. So all I'm doing is adding up my credits. So let's do that. The items that appear on the credit side. So on our calculators, an amount of 3,700. Okay, we then adding 31,250 plus 352,500. Sorry guys, I know my handwriting there is not very clear, but that is 352,500. So we've added up the credit side. We are now going to minus the items on the debit side, so minus 275,000, and then finally minus the 93,750, and that will give us the new equipment that was purchased, 18,700. So that figure that unknown figure, that amount is 18,700. So please remember, guys, if you are doing the actual T account, you would get 18,700 by simply adding the credit side minus the debit side. But if you were doing the note, you are still getting the same answer. So in the note, remember, we're doing the same calculation, but now slightly differently. So I'm starting at the bottom. So at the bottom, I'm obviously referring to this amount here. So at the bottom, let's begin. Okay, 352,500. Depreciation was subtracted, so it must be added. So plus 31,250. Okay, disposal was subtracted, so it's got to be added, 3,700. Okay, then the addition of the land and buildings now must be subtracted, so minus 93,750, and then finally carrying value at the beginning of the year is positive, which means I must now minus the 275,000. Again, we're working backwards, and as you can see, we are still getting the 18,700. So like I said, you decide the T account or the note, whatever works for you. Okay, so the 18,700, we can now fill that into our note plus 18,700, and the total amount that was spent on fixed assets, let's get the calculator out. So 18,700 plus 93,750, and that gives us an amount of 112,450. And remember, that is an outflow of cash because you spent this money on a fixed asset. So money obviously left your bank account. Okay. Right, there's about 3 minutes left, guys, so let's see how much we can finish up in this time. So please remember, there was a question, it was 1.2, which required you to calculate the value of equipment, new equipment purchased, and that's the calculation that I just did where we got the amount of 18,700. Okay, right, let's now move on to the proceeds from the sale of fixed assets. So from our information that I already read, we did sell equipment during the year, and remember, it was sold at carrying value, and we already calculated the carrying value, which was 3,700. Remember, cost, right, minus the accumulated depreciation, so it was sold at 3,700 at carrying value. So that amount of 3,700, remember, that would be money going into your bank account because that's what you sold the asset for. So again, just remember, show your calculation in brackets. Okay. Right, let's see if we can quickly tackle cash flow from financing activities. We've got just over a minute left. So please remember here, you're going to show proceeds from the sale of shares. And in this particular case, it's very, very straightforward. So if we look at your proceeds from the sale of shares, even if I don't fill this in, guys, because we've got just under a minute left, ordinary share capital, there's no buyback of shares, so it's quite straightforward. Previous year, 150,000, current year, 200,000. So all I'm doing is subtracting. So as you can see, ordinary share capital from last year to this year increased by 50,000. So that's what you would fill in, right, under proceeds from the sale of shares, an amount of 50,000. Okay, and then finally, the last amount that you've got to fill in is your loan. So if we look at mortgage loan, your loan from 100,000 has now decreased to 81,250. So clearly there's been a decrease or a payment towards your loan, and this needs to be shown in brackets. Okay, unfortunately, we have run out of time, and it's not going to be possible for me to show you that particular calculation. But what I'm happy is I've dealt with the calculations that you guys often struggle with.